Hey, good afternoon, everybody. Going to go over our Forex trades for today, Friday, January 8th. Just one trade, which was a full scalp last night in Aussie yen. We're going to go over that in a minute. First, the economic news this morning was the non-farm payroll, the biggest number of every month, actually. Was estimated to come in at 200,000 new jobs created, came in at 292,000 new jobs created. So you're going to hear phenomenal headlines, how great it was, and how great the economy is. But you have to dig down into it. Even though it created 292,000 jobs, unemployment rate stayed at 5%. Didn't tick down at all. Participation rate ticked up. That's another thing you're going to hear. People are all excited about this morning. The participation rate is so bad that it needs to do better than just tick up, is what you've been hearing out there. On top of the non-farm payroll for the month of December, going back, they revised November and October. Matter of fact, they revised November's to 307,000. So the Department of Labor is making these numbers seem so phenomenal. But again, like I said, if you dig into it, the biggest fly in the ointment is that there's no wage growth. It was expected to be wage growth of 0.2%, and there was absolutely none. Stagnant wage growth. So you have the government claiming all these jobs, yet no wage growth. So that's not good. And then if you look at where the jobs were, construction, they're telling us construction gained 45,000 jobs, that's a pretty good gain. But they're also telling us that the majority of the construction jobs came from residential housing. And we know that's impossible because residential housing, not only is it going down, new housing starts is going down, new housing permits are going down, new housing sales is going down. So it's obviously either their data is lagging or they're doing something else in their data mining. Healthcare was increased by 39,000. That was thanks basically to Obamacare. Food and services, basically waiters, waitresses, and bartenders, was the third highest increase in jobs, 37,000. So we're still continuing to build an economy on the backs of waiters, bartenders, and waitresses. What else here? Let me just read through my notes here. The market reaction was muted. We had the Dow futures up about 240, estimating an open of about 240 points higher here in the States on the backs of China. And then when the numbers came out, they popped to like 290, but the market ended up opening around 200 and steadily went down. So you had violent actions in the currency market, so it was very difficult, obviously, to be able to trade this morning. But we had the one trade last night. The other thing I wanted to point out with this great employment number that the government told us about, the odds of a Fed hike in the April meeting only went from 42% yesterday to 48% after the great number. So if the number was that great, those odds would have jumped. They would have jumped, I would think, over 60%. So it's telling you the street doesn't completely believe it. The other thing on that jobs report, when you dig into it, multiple job holders surged to the highest since August 2008. So if our economy was creating, 300,000 jobs a month, the last few months, every month, there's no reason that that people would have to have multiple jobs. It's the highest level since the financial crisis in 2008. So what the government is telling us when it comes to the unemployment and the jobs, because that's the biggest data point that everybody knows about, it's the biggest data point on the Fed's mind. It's just not. It's impossible, right? It's just statistically impossible. And then we had a few firms lowering GDP forecast for the fourth quarter. Barclays lowered, Goldman Sachs lowered again today after the employment number came out. So again, the street, these are some pretty intelligent people. The street is telling the world that they really don't believe the government's numbers from unemployment and jobs. and we had this great number again, these great numbers these last few months with revisions and everything. Yet fourth quarter GDP is supposed to, consensus is to grow at less than 1%. So I'll go back to it. If you're creating 300,000 jobs a month in your last quarter of the year, that last quarter should have some pretty phenomenal GDP growth, certainly not less than 1%. So some interesting things there to talk about for sure. As far as the trade we had was last night, and you'll see here this big spike came as the Chinese adjusted their currency, the yuan, and it was actually adjusted pretty much flat for the day, whereas the night before it was adjusted down a half of 1%. Obviously, we wanted to be out before that adjustment comes. It comes out around the same time every night. So, this is a 30-minute chart. When you're scalping on 5 or 15 minute. So we were long from 82.76, got out 82.818, picking up 5.8 pips on a full size trade there. And then it was about maybe 20 minutes, half an hour later, the Chinese announced what they do with their yuan, and you just had a big spike there. Which actually helped their equity markets as well. China opened up over 2% higher, helped our Dow futures and S&P 500 futures last night. But the Shanghai index was all over the place. You have to watch all this stuff no matter what you're trading. So Shanghai was opened up 2.2% higher. It took about less than an hour for it to be down 2%, and then a little while, maybe 20 minutes, half an hour later, it was about flat. And then it finally wiggled its way up to be up about 2% by the time I shut computers down last night around midnight or so. So that's it. We're going to wrap it up for the week. Slow week, but a profitable week, so that's a good thing. If any signals come out, they'll be coming your way. If you're still trading now, good luck, and we'll be back Monday, assuming we get some action. Have a great weekend, everybody.